Welcome to DeFi Crypto Today. Our topic today is Perpetual Futures Strategies. Part 1. We're going to talk about the Perpetual Protocol on optimism. But mostly we're going to try to demystify what perpetuals are. Right away, I have to tell you, they have nothing to do with this lady. This is Madame Hélène Carrère-Doncos, who's the perpetual secretary of the French Academy. It's got nothing to do with her. The French Academy, for those that don't know, is a very, very ancient institution in France, and it dictates French grammar and spelling. And the people that work there are very famous French authors, including Madame Carrère-Doncos here, who happens to be the perpetual secretary. So she's the secretary of the French Academy for life, and that's why she's called perpetual secretary. And all the nice people that wear this really fancy outfit are called immortals. Those are French immortals. So if you didn't know, we had immortals in France, we have them. So it's got nothing to do with her at all. Also, it's got nothing to do with law and order. Okay? This lady's busting perps all day, every day. These perps are not the same perps. Okay? So we're going to talk about perpetual futures. Okay? Just wanted to put a little bit of humor in here. So today it's very, very, very basic. We're just going to explain the essence of perpetual futures. We're going to try to do some very basic transactions on the Perpetual Protocol. And this is part of what I'm doing is we're doing some series on optimism, which is a layer 2 blockchain. If you didn't see my previous optimism videos, the links are in the description. Optimism is a layer 2 blockchain. What does that mean? That means layer 1 is Ethereum, and we're putting layer 2s on top, such as optimism. Another famous layer 2 is Arbitrum, and we're also starting to talk about that in several videos. So this year, I'm talking a lot about layer 2s. Why? Because I have the feeling that layer 2s are going to explode in the sense that the TVL is going to grow like crazy on various level 2s, such as Optimism and Arbitrum. Why? Because as much as we love Ethereum, because DeFi started on Ethereum and it's the most decentralized and the most robust blockchain ever, it's also insanely expensive and painfully slow. So you're going to see on Optimism, typically you don't pay very huge gas fees, and the transactions are super fast. Typically, you click the button and it's practically done the next second, as opposed to waiting several minutes sometimes on Ethereum and paying like an arm and a leg and your firstborn child each time you do a transaction in gas fees. So that's why we're going to talk a lot about optimism stuff. First, just to recap, last time we talked about Lyra, which is an AMM for options trading. So those are other types of derivatives. Okay, we're going to go back to option strategies in a future episode of that series. And we also talked a little bit about synthetics because Lyra uses synthetics assets. Okay, and all this is on Optimism, as you can see. And now today we're talking about Perpetual Protocol. And Perpetual is also built on Uniswap layer 3, not layer 3, version 3, sorry, which is now also available on Optimism. For the longest time, Uniswap was only available on Ethereum, and everybody wanted to kill them. So They said, all right, all right, all right. So they decided to open up on Optimism, on Arbitrum, and even on Polygon now. So they're becoming multi-chain to respond to market demand. And you also have 1inch, which is on several blockchains, including Optimism, Arbitrum, and so on. And you can swap tokens there as well. All right. So in order to get set up, I forgot to put that up, chain list. So if you're not set up for Optimism on your MetaMask, go to chain list. All the links are in the description, okay? You don't need to look for them. You just type Optimism. And you want this one. So you connect your wallet, and then it says add to MetaMask. In my case, I already added it, so it's not going to pop up. But typically, a little MetaMask window will pop up with all the details pre-configured for you. You just confirm, and that's set up. Now, the next step is gas. Okay, you need Ethereum again. Why? Because it's a layer 2, so it's built on top of Ethereum, right? So it's the same gas, but you pay a lot less. Okay, so it's you get a lot more mileage for your gas on this one. So to get gas there, you need to bridge it over. Now, one of my favorite bridges is Xpollinate. Again, the link is in the description. And typically, I don't like to bridge from Ethereum to anywhere else simply because the gas is outrageous and it's slow. It's really slow. So if you're set up, for instance, on Binance, okay, I don't think you can send it directly to Optimism yet. If you can, just do that. If not, you can send it to Binance Smart Chain, send some ETH to Binance Smart Chain. So we can select ETH right here. And then you can, once it's sent to Binance Smart Chain on your MetaMask, you can go to this bridge, and then you send some ETH to Optimism, okay? Send enough to pay for gas. I like to put at least $100 or $200, so I'm good for a while. Okay, gas fees are really low on Optimism, so it's going to last a while. But send enough so that you don't run out of gas when you're performing transaction, because that sucks. So, and this typically will cost you for the bridging about $15 to $20, depending on the amount that you're sending. Okay, but it's fast. Okay, typically from Binance Smart Chain to Optimism's 2-3 minutes. Okay, so you don't have to wait very, very, very long, and the bridging fee is not that bad. Okay, so that's the bridge I like to use. You can use other bridges if you like them better, but that one I like a lot because you can transfer funds from various other blockchains. Okay, all right. So let's assume that we've got gas and that we're set up for Optimism. So this is what your gas is going to look like. I put a little bit of ETH. Now it appears as OETH for Optimism Ethereum, I guess. And you need also, to perform any transaction on Perpetual Protocol itself, you need some USDC, okay? Because that's the main currency that they use as collateral for your purchases. Okay, so make sure you bridge some of that over as well. All right, or if you don't want to bridge it, make sure you send enough, you bridge over enough Ethereum, and then you can swap it on 1inch, for instance, or another DEX. All right, or you can swap it on Uniswap or whatever you want. Okay, so that's it. So let's assume we're all set up on Optimism. Let's have a look at Perpetual Futures and see what they're all about. Okay, so what are Perpetual Futures? Well, first of all, they're very easy to trade, and they're fun to trade, and that's why there's so much of it. Okay, it's what they call a derivative. Okay, so it's not the actual product. It's a product based on another product. Okay, so you got an underlying asset such as Bitcoin, Ethereum, or whatever, and you build a contract that reflects the price of that underlying asset. So that's a derivative. Okay, now derivatives are huge. Okay, there are trillions of dollars of derivatives trading every single day. Just to give you an idea, futures trading is about 2/3 of Binance's and 3/4 of FTX's volume. These guys are very happy. They make a ton of commissions, okay, on futures. Not just only perpetual futures, there are other kinds of futures. But the perpetual futures are probably the most popular on all those exchanges. So the first perpetual futures contract was created in 2016 by BitMex because traditionally futures have expiry, and it's like the traditional system of trading futures. You got a futures exchange, and they're only open between this hour and that hour. And only a few people are allowed to trade this stuff, and it's like regulated up to your eyeballs, and it's like slow and yeah. So, and crypto never sleeps and is ultra fast. Okay, so the BitMex people said, in a market that never stops, why should a crypto futures product need to expire? It's stupid. So they decided to make a perpetual futures contract that never expires. Okay, you close your position whenever the hell you feel like closing your position. You think, okay, I took enough profit, or wow, I'm losing too much money on this. I'm gonna close it. So that's the point. Okay, that's the point. Simplifies your life a little bit, so you don't have to worry too much about when is it expiring, and what do I need to do? Do I buy another contract? I sell another contract, or what? Anyway, so perpetual futures never expire. That's what perpetual means. Okay, it goes on forever. Okay, like that lady at the French Academy. She's there forever. Traders can keep their positions open for as long as they want. That's the point. Okay. A futures contract is an agreement to buy or sell a commodity, a currency, a stock, orange juice, gold, crypto, your firstborn, whatever. Okay. You can trade anything with this. Okay. And you have a predetermined price, and there's a specified time in the future. That's a typical traditional futures contract. Now, forget the specified time in the future. That's gone with perpetuals. Okay. So further, what are perpetual futures contracts? So futures are derivatives. You gain exposure to an underlying asset without having to buy the actual underlying asset. So you can get exposure to Bitcoin or Ethereum or Solana or gold or whatever, and you don't need to buy it itself or sell it itself. You can trade long and short on it without having the asset itself. And because it's a perpetual future, you don't need to take delivery. It used to be that you would have to be stuck with the delivery if you let the contract expire. And you ended up with like 10 million tons of pork bellies, and it's like, okay, where am I going to put that? So now the settlement is in cash in USDC for Perpetual Protocol. So you don't need to actually get the merchandise anymore. So it's used for price speculation, hedging, and arbitrage. So there's several ways to make a buck with this. So it's a special type of futures contract with no expiry date. Traders can hold their position for as long as they like, as we said. And it's based on an underlying index price. So the average price of an asset according to major spot markets and their relative trading volume. So what this means is that unlike conventional futures, perpetual contracts are often traded at a price that is equal or very close to the spot markets. So Bitcoin is here, the perpetual future is going to be very, very close. Sometimes the market goes crazy. Okay. So yeah, don't bet that it's always going to be exactly the same. Okay. If the market is crazy volatile, yeah, there's going to be some wild fluctuations at some point. Okay. So be aware of that. So why are we trading this stuff? So the original intent of futures contract was hedging. It's like insurance. Okay. You want to lock in a price. Okay. And you want to, like you're betting that the price is going to be X and so on. So it's used for risk management. Okay. And that's the main reason why they were invented in the first place. You can gain also short exposure, so traders can bet against an asset's performance even if they don't have the actual asset. Okay, so you think Bitcoin is going to crash, so you can bet against Bitcoin using perpetual futures, okay, without having the actual asset. You can also gain pretty amazing leverage depending on the market. At perpetual protocols, you can go up to 10x. I believe on some centralized exchanges, some of them may go as high as 100x, which gives me a nosebleed. But that's a lot of leverage. That's a lot of leverage. You have to be an experienced trader to make this work. Okay. Because if it goes against you 100x, you lose your cash pretty fast. So yeah, so the point is like with leverage, you can enter positions that are larger than your actual account balance. Okay, you got $1,000 and you can bet 10,000 because of the 10x leverage. Okay. So what's the funding rate? You know, the funding rate is a concept that's been created for futures, especially, and it's very much in use for perpetual futures. Okay, that's because there's no expiry, so we need a funding rate to make sure that the price of the contract doesn't go too far off the price of the underlying asset. So to make sure that the price of the futures contract doesn't diverge too much from the spot price of the underlying asset, perpetual contracts have a funding rate. Funding rate is paid periodically. It changes from exchange to exchange. At FTX, it's once per hour. I forget what it is for perpetual protocols. I'll have to check the documentation. And it provides an incentive to one side of the market. So when the price of the perpetual contract trades above the spot price of the underlying asset, the funding rate becomes positive, and the long position holders have to pay the short position holders. So if it goes too much one side, that the side that's gaining too much has to give on the other side. And so reflexively, if the price of the perpetual contract trades below the spot price of the underlying asset, the funding rate becomes negative and the short position holders have to pay the long position holders. And by doing this, it rebalances the price and it's closer to the underlying asset. That's the point of this game. So there are arbitrage opportunities that happen with this for very sophisticated traders. Okay, it's possible to buy, for instance, you can trade a perpetual futures contract on one exchange and trade on another exchange to rebalance and whatever. It gets a little bit complicated. We're not going to do that today. This way, the price of the perpetual contract converges with the spot price of the underlying asset. That's what you want. You want to bring it back to in alignment. Overview of Perpetual Protocol. So that's the protocol we're going to have a look at today. Okay, so it's a decentralized exchange. It's not like Binance, it's not like FTX. You don't need, there's no KYC. They don't care who the hell you are. And they just care if you've got money in your wallet. All right, so no KYC, it's anonymous, no custody. So the users are always in control of their assets. That's another issue that people forget with centralized exchanges, is that if you put money on Binance or FTX or another one, another centralized exchange, you give them your money, okay, and it sits on your account inside the centralized exchange. So they have the custody of your assets. You're not in total control. If, let's say, you put $100,000 there and you say, oh, I want it back because I need it for whatever, I need it to buy a new house or whatever, they might say, well, sorry, but we can't let you take all that money at once because of regulation 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. And government wants you to sign this paper. And right now we're short of funds and we just can't let you take all that money right away. And my grandmother is sick. And, it just goes on forever with centralized systems, okay? Because they have to comply with a bunch of regulations and internal regulations and how much liquidity they have at their disposal and blah, 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 blah. You don't have that problem here. You can put $100 in this DEX, or you could put 100 million in this thing, and you can take them out whenever you want. Okay, it's that easy. So, funds can never be seized or frozen, which can happen with centralized exchanges. If the government decides, trading on Binance is trading perpetual futures is illegal, we're going to freeze your money and take it because we want taxes or whatever. Okay, so yeah, that's possible. Governments could do that to centralized exchanges, but not here. Trades can be audited and verified by independent third parties at any time. It's on the blockchain. Everything is verifiable. Okay, so if something goes wrong with your transaction, you can go and find out what happened. Okay, and you can check that everything's going the way it's supposed to be going. So it's permissionless and transparent trading. You don't need to ask anybody permission to trade there. Isn't that nice? Yes, it is. You can go long or short on various assets, and you can go use up to 10x leverage. So right now, there's Perpetual Protocol started with version 1 on XDAI network, okay? And it's still operating there. But XDAI is not that popular, unfortunately, and it's not that speedy. So Optimism was chosen for version 2 because it allows for more flexibility and very fast transactions as well. And it's a bit more popular than XDAI. But if you prefer XDAI, the transaction fees are very, very low. The new stuff is happening on version 2 right now. Okay, so we're going to focus only on version 2. The links I'm going to put in the description are all for version 2. Okay, don't get confused. If you end up at version 1, it's going to say XDAI instead of Optimism. Okay, so if you're at XDAI, you're at version 1. You need to switch to version 2. All right, so as I said, it's going to be on Optimism Layer 2 blockchain. We're using ETH for gas, and we use USDC for collateral and settlement. So you don't need to settle with actual pork bellies or Bitcoins or whatever. You settle all in USDC. Protocol makes use of concentrated liquidity on Uniswap version 3 because it's available on Optimism as well. So they're taking advantage of this new technology at Uniswap. Right. Warning! There's always a risk of financial loss. Big fat risk of financial loss, okay? You could lose 100% of the funds that you use to place your trades. So you put $100 on perpetuals, $1,000,000 on perpetual protocol. You could lose it all. You could. Yes, it's true. Especially if you're going to use leverage, okay? And at 10x, the gains and the losses go pretty fast, okay? Bitcoin goes up $1,000 in a day. If it so, let's say Bitcoin, let's say you're betting long, right? And you put I don't know, $1,000, and your position, let's say, is $1,000, and you choose 10x, and Bitcoin goes in your favor. Bitcoin goes up $1,000. Well, now you have a $10,000 profit. Great. But if you were short, okay, then it went down 10,000, right? So you're going to lose your deposit completely. It's going to be gone. Okay, so be very careful. Okay, so we're just going to show you very basic stuff today, nothing very sophisticated, just to show you that it's actually very easy to trade on this thing. But we're going to talk about more sophisticated strategies in future episodes. So be aware that you can lose 100% of the funds that you used to place your trades. Okay, and you have to be careful and watch what you're doing. All right, be responsible. So again, put money in these projects that you're willing to lose. It's a bet. You're betting, that the price of Bitcoin is going to go up, or that the price of Bitcoin is going to go down, or the price of Solana, whatever. Okay, those are bets. That's called speculation. Okay, they're bets. It's like going to the horse races. Okay, you can lose your money. Many times you will. But the good news is that you will never lose more than your initial investment. So if you put $100, $1,000, $10,000, it's not going to be bigger than that. Your loss will not be bigger than that. All right. So there is a risk of liquidation if your collateral drops below the maintenance margin. Yes. So if you're using 10x and it goes against you, you're going to get liquidated at some point if it goes on too far, okay? If your collateral cannot cover, okay? You're going to get liquidated, and they're going to charge you some fees. Always perform your own due diligence before trading or investing. Research, okay? Figure out, okay, is Bitcoin really going to go up, you think, or not? Okay? Also, be aware that the software is beta. Okay? Perpetual Protocol has been around for a couple of years already. Okay? So these guys are experienced programmers. But the Optimism version 2 has been open only since November of 2021. So it could be bugs. Okay? And that's why we're saying it's in beta. Trade at your own risk. They're not responsible if it goes wrong. Okay? So be careful. Be aware of that before you do your trading. Okay? You can lose it. All right. So we went through this. All right. So this is the version 2 of Perpetual Protocol. There's a little warning message here. Welcome to Perpetual Protocol. Perpetual Protocol is a decentralized perpetual contract protocol with virtual AMMs to provide guaranteed liquidity. If you encounter any bugs, please report them in the feedback channel on the Discord. The Discord link is there. I'll show you the Discord in a minute, and the link is going to be in the description below anyway. This is beta software. Use at your own risk, okay? So it's worth repeating. And you agree to all the terms and services forever. In perpetuity. Start trading. Boom. Okay, so make sure that you are already configured for optimism, that you already have Ethereum to pay gas, and that you have USDC to buy any of these lovely Perpetual Protocol contracts. Okay, so that's the things you need before you do this. So we're going to connect the wallet. We're going to say MetaMask. And we go next. And yes, we're all happy. All right. So if you're your first time, they're going to have this message, okay? And it says transfer or and deposit. So you could transfer if you don't have USDC in your wallet. You can bridge it over. This is a way, they have a bridge, okay, that connects to this. Now, what it shows us right now, you've got these two little green balls there. Basically, it checks if your wallet already has enough ETH to pay for gas, and if you have enough USDC to buy any of the product. Currently, I've got enough, so I've got little check marks on the green boxes. Okay, so I'm just going to click approve and deposit. And let's say I want to deposit. So let's say I want to go and deposit, let's say $100. Let's see if that works. And I'm going to pay gas. Give permission to access your USDC. Yes. So it's going to take my USDC. And the transaction should complete in a few seconds. Typically, optimism is pretty fast, so we shouldn't wait too long. Okay, transaction is confirmed. So now we're going to hit deposit. And we wait for MetaMask to wake up. And we confirm. See, right away, we can see that we have $100 deposited there. So just wait for this to finish. So deposit successful. Congratulations. Thank you. It's done. All right. So we've got $100 here. Now, we're not going to go through all this, but I want to show it to you anyway. They have a liquidity mining program for people who want to deposit funds and help provide liquidity for the protocol. You can earn some passive income through that. And they have a video that explains very well what perpetuals are. And they have here a trading competition. So if you like this kind of stuff, just check it out. Okay, so we have money. And right now we have trades, and that's what we're going to use. We're not going to go in pools for the liquidity mining program, so we're not doing that today. And we have a choice of several assets now. We've got AVAX, BTC, CRV, ETH, Luna, Sand from Sandbox, that's a new one, and Sol from Solana. So whatever. Let's take ETH, everybody's favorite gas. All right, so right now, market is shooting up. And we can look at others as well. Basically, what you're trying to do is like you're trying to figure out if you're going to go long or short, right? Right now, by default, it's set for long, but we could go short too. All right. So we're looking at the chart, and this is for traders, okay? If you're a trader and you understand charts and you know what you're doing, okay, you can figure out, okay, I'm looking at the chart right now. I think Ethereum is going to keep on going up for a while, or I think nah, it went up far enough. I think it's going to go back down, okay? So that's what you're going to figure out. If you want to go long, okay, that means that you believe that the asset's going to go up in value. Or if you want to go short because you think the asset is going to go down in value. Right now I'm looking at this, and although it looks like it's going to keep on going up, I don't know for how long, right? the trend is very sharp for me. I'm not a big trader, so I want to have a look at the other assets and see what they're doing. Are they all doing the same or they're very different? So this is pretty close. BTC is probably going to do the same thing up to a point. How about CRV? CRV is doing pretty much the same. So we've got ETH again. Luna. Wow, Luna's shooting up quite a bit. Yeah. About sand. Sand shot up a little bit. Actually, quite a bit. Yeah. And how about Sol? So the trends are all pretty much similar. What am I going to bet on? This went up very fast. I don't like when they go up too fast. All right, let's say I'm gonna go long on CRV just for the heck of it. Okay, because I just want to make a very quick transaction here and see what's going on. All right. So basically, you play with this here, and you've got your buying power. Buying power is the free collateral. That's the amount I deposited. I deposited 100 and multiply by 10. So that means I don't have to use 10x leverage. I can use the slide here and choose how much leverage I have. And that gives me the buying power. Okay. I can use 8x, for instance. Okay. And here it tells me if I have enough money deposited to perform the transaction or not. If I were to go to 10x, it's going to give me a warning that I don't have enough margin right now. So the highest I could go for is 9.5x at the moment. So it's very risky. Okay, it's very, very risky. So if you want, because right now, if I'm going long, I'm betting that the trend is going to be for CRV to keep on going up. Okay, and I could be totally wrong. It could just crash in the next 5 minutes, right? And if it does that, well, bye-bye collateral. At some point, then they're going to liquidate me. Okay. But if I'm betting, I might as well bet hard, right? So we could go for the maximum or not. We can choose 5x here. And so essentially, if the market goes in my favor, I should be earning 5 times the amount that I'm betting. In terms of like gains, the gains would be multiplied by 5. Okay, so if it goes up $1, I would make $5. Okay, in gains. If it, on the other hand, if it goes down $1, I would lose $5 at a time. Okay, so you choose what you feel is what you're comfortable with. Again, use small amounts. Right now, I only have $100 deposited there, right? So it's going to show after. But anyway, so let's confirm this and see what happens. We're going to go 5x. Just for the fun of it. It's for demonstration. All right, so confirm. Transaction is sent. And it's already done. Wow, that was fast. Okay, so net profit or loss. Unrealized P&L including trading fees for opening and closing the position. So if I wanted to close my position, let's say I made a gain, I want to cash it out, or I lost enough money and I don't want to lose more, I can just hit the close position and it's going to take close the position, realize the gain or loss, and put the rest in the deposit. Okay, and that's what we're going to be able to use with later. So position info at the bottom, liquidation price, it tells you at what price we're going to get liquidated. So if the price drops below 242, which is not very far from 284, we can get liquidated. Okay, so again, watch for this stuff before you do your transactions. Okay, so be aware of the numbers, figure out, okay, is that reasonable? What are my odds of winning this bet and or losing and so on. And again, start playing with small amounts. You can put like a very very small deposit there, like $20 or whatever, just to get the hang of it and understand how the system works. Okay, don't put tens of thousands of dollars and then lose them and then cry and whatever. Okay, test the system, test your understanding of the system first. Okay, and play with it. Learn to play with it. At some point in future episodes, we're going to talk about more sophisticated strategies. Okay, but this is just the basics. Okay, so we just did a long position. We could do a short position. Also, it's just as easy. Okay. But right now, we're not doing any very sophisticated strategies. This is just to show you how to use the protocol and place your bets. All right. So that's it for this video. If you like this kind of stuff, please like and subscribe. Don't forget to ring the bell. Download the free book. All you have to do is click the link, put your name, your email address, hit the submit button, and then you get a big fat button that says download the free book. And if you miss that button, well, we're going to send you an email with another button that says download the free book. And if you don't want to download the free book, you go to Amazon, you pay $5.99 to Jeff Bezos, and Jeff will send me $1. See ya.